Welcome back, and joining me for a closer look at what's played out on the market scene today is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. Lots that is happening in the macro economy. We are now back to sitting in the dark as well. Locally, what do you have your eyeballs on in terms of market influence this week?
There's a lot going on. I think for South Africa in particular, the inflation print, GDP numbers a little bit later, and balance of payment numbers that will have some effect and hopefully provide some guidance as to the Reserve Bank's decision making going forward. In addition, I suppose, to any news on our rapidly developing budget, the budget that never was. Hopefully we'll get a bit more color on where the coalition negotiations are going in that.
Indeed, I do know that we have a number of scheduled meetings on that. But actually, quite surprisingly, earlier on I was speaking about us back to sitting in the dark. The rand is actually quite stable. Is this not nerve-inducing at this point?
It certainly is. One has to point out that there's a lot of dollar weakness in this. So the rand is still a pretty decent performer because it did sell off, it did underperform a bit last week in the wake of the budget that never was. I must point out not only that the rand strengthened significantly against the dollar, it strengthened a little bit against the euro as well, the euro and the pound. And the bond yields have improved markedly, I must say. So they're actually now at a better level than they were before the budget, delay. So from that perspective, calm and of course other global factors, grabbing the headlines over specific concern around South Africa. And in all of that noise, the issues around Eskom and load shedding and us perhaps being deceived by how well things were going in the background seem to be getting papered over a little bit, with the focus being elsewhere.
Yeah. Well, talking about grabbing headlines, Prosus has definitely grabbed quite a lot of headlines globally. We're seeing headlines such as Just Takeaway.com's share price surging 54%. But on the opposite side of the spectrum, we did have Prosus's shares actually slumping 8% together with Naspers, of course, those two dragging the JSE down. And this comes after the announcement that Prosus is acquiring Just Eat Takeaway in Europe. Just talk to me about, what markets got from this. I do know that usually the acquirer is usually the one with a kind of a sell-off, but this is quite a heavy sell-off. Is it just a case of you are spending money or you are spending too much money for this asset?
Too much, I guess. They're paying an enormous premium, 50% to what the share was trading at last week. And I think, the market, when this new CEO replaced Bob van Dijk, I think, the market liked that news, was not fond of Bob. Perhaps they hoped he would be sort of a rational custodian. And this acquisition looks incredibly ambitious into an industry that, of course, had seriously inflated multiples through COVID, when these delivery services, attracted ridiculous valuations and frankly tanked after that. The industry's gone through, a substantial consolidation, and amongst other things, Just Eat exited their own holding in Grubhub towards the end of last year at a fraction of what they paid for it. But it is a market leader in Europe, and I suppose Prosus are claiming that they'll be able to roll out what they've done in Brazil into that business as well. And we need to consider that is where the CEO comes from. But at the same time, he's really signaling to the market that he might be willing to invest aggressively. And with the exception of Tencent, Naspers and Prosus have a bit of a history of making poor investments and destroying shareholder value. I mean, not maliciously or anything like that. It's just that they do go for these sort of slam dunk private equity type early stage businesses where the valuations can be excessive and the theses can be quite risky. So I think the market was hoping for a little bit more caution, a little bit more, like returning capital, doing what they're doing, by keeping the share buyback going while selling off the 10-cent holdings. And this is rock the boat. And on top of that, we saw sell off in Chinese equity overnight because of, the AI rally from last week cooling off. So all of that's putting a bit of an overhang on our market.
63% premium, 79 billion rand. My lips are even struggling to say that amount because, I mean, also just before payday. Let's take a look at Sasol that came out with interim results today. The company, of course, experiencing a number of headwinds externally and internally. We did have the bottom line down by more than a 30%. Share price, though, climbing almost 3%. But I don't know if there's anything that we can get from those share price movements because it's been very, very volatile of late. What did you make of those numbers coming out of Sasol?
So just from a governance perspective, one has to compliment them with how well they've guided this result. And that's part of the reason why the share price hasn't moved much despite the significant print that we see in front of our faces. I think one of the major issues is they've suspended the dividend, something which we all anticipated. They are at an enormous cash burn rate at this stage. And despite the fact that they've indicated a shift in the strategy towards acquiring more coal and looking at alternative means of reducing those emissions targets through improvements in efficiency and the adoption of biofuels as an output, that we haven't really received enough guidance to see exactly how this turnaround strategy in the petroleum side of the business is going to work. More specifically. So it's a tough call, and it's hard to really make a good investment case for this business. We will have to wait for the capital markets day to get more guidance from management. But ultimately, this was very well guided, and that's part of the reason why the share price reaction was so muted.
Okay, well, let's talk about Altron because they released their full year trading update. A company saying that it expects its headline earnings per share from continuing operations to climb by at least 40%, seeming that from a total operations point of view, they will be swinging from a loss to a profit. But I mean, from a bird's eye view, it would seem that those numbers are good, but that's not what we got from the share price reaction. I think the last time I checked, it was down about 3%, unless the devil is in the details. But also, were there enough details?
Yes. So let's start with that. Again, this is a trading update, so we're very sparse on details. They sort of give a top-line comment on each division without giving a single number, other than this headline number of at least 40%. And one must point out that, they in some of the divisions and overall on an EPS basis, they had losses in the previous period. So the market was pricing and expecting a significant bounce. And frankly, given the share price action, the market was disappointed by this update. The IT services business, as we've seen in some of the other peers, that seems to be under pressure. Although platform, they were quite bullish on that. That's a Netstar, amongst other things. It looks, at least from a South African perspective, to be performing more robustly. But we don't really have those numbers per se. But it looks on the face of it like this is a little bit disappointing relative to expectations. We will have to wait for that further trading update that needs to be guided, because the JSE doesn't allow you to just leave it open like this. At some stage, you've got to provide a proper range, of a 10% range for where this change is going to end up at. And then, of course, hopefully we'll get more color. Otherwise, we'll have to wait for the actual results to get the full picture.
All right. Well, Cobus, let us get to your stock pick for today. Where have you placed high expectations?
So my pick is an SA Inc. stock. They used to be all the rage around 6 months ago. Bell Equipment. This is a share that has been under corporate action a lot over the last 4 years. And part of the reason I'm calling it a buy is given the valuations it's trading at the moment, it's a high quality business with a controlling shareholder that has twice attempted to take out the minorities over the last 4 years. Once in 2020 at 10 Rand, and now again at 53 Rand towards the end of last year. Both times the market told them this is not a good enough offer and walked away from those offers. You can now buy the share at around 38 Rand. And frankly, I suspect that given the attractive valuation, the likelihood of corporate action in the near future is good. And perhaps the controlling shareholder or another player will take another step at the cherry, given that the evaluation is so attractive, and frankly, if somebody was interested in it at 53 rand. And it's now trading at 38. What does that say? When the market said no to 53, frankly, there should be significantly more upside here. So that's a stock we like. We like it on the fundamental basis as well. But we believe it's a good target for an acquirer as well.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Cobus. That was Cobus Potgieter from Southern Cross Capital.